Hey folks, I'm Mark Sebastian, your only option. Today I want to break down what happened with the market on Wednesday and Thursday and what I'm looking for on Friday and into Monday. So let's dig in. Well, the S&P 500 after a very ugly Thursday managed a pretty nice rally, or excuse me, a really ugly Wednesday, managed a pretty nice rally on Thursday on the back of PPI. Since January, the S&P has not had 2 days closing below the 21-day moving average. I know it sounds incredible, but it's been that long. We have to go back to January 3rd and 4th for us to close below the 21-day moving average. And it looked like we might be able to do it Wednesday and Thursday, but nope. Lo and behold, the S&P managed to get over the 21-day moving average. The 21 is about 51.98.59, and we closed 51.99.06, just a sliver above that 21-day moving average. What I would point out, though, look at this red line. This is implied volatility. It is staying very high, so we are not out of the woods. The market looks like it's about as nervous about things as we have seen in some time. So what am I watching closely on Friday and into Monday? The answer, earnings. The big dog of all earnings is JP Morgan. Managed to close a little bit up on Thursday, but definitely looks weakening into its earnings. Its implied volatility. Look at where implied volatility was the last time JP Morgan announced earnings. It was about 20. The previous time it was, we'll call it 24. And here we are. We've got implied volatility ahead of these earnings at about the highest level that we've seen. So earnings expectations for JP Morgan, they're pricing in about a 3.36% move. The normal implied move is about 2.5%. So they're expecting JP Morgan to make a bigger move than markets are overall, than typically happens around JP Morgan earnings. A couple other big earnings that are happening on Friday morning. Citigroup, again, they're looking for a bigger move than normally is priced in. And Wells Fargo, again, all of these banks have had a nice run, and the market is looking for a potentially bigger move than we're used to. What are the ramifications? Well, I think if you see bank earnings miss, there's going to be some serious punishment on these. They've had such a nice run that you could actually see some real pain here. If JP Morgan does report decent earnings, though, it's trading 195. It has yet to really be able to crack over 200 with any real authority. We get good earnings. You can expect a look at 200. Next week is when earnings really start in earnest. We'll get Alcoa. We'll get a whole bevy of earnings, but including Goldman and Morgan Stanley and several other names. But these three earnings, they're really going to, I think, set the tone for Friday into Monday. Watch to see if those disappoint. If they disappoint, then we could have a rough Friday and a rough Monday. So, folks, that is what I'm looking for in the market. Those are the levels I'm watching. And pay attention to that S&P 21-day moving average. That is going to be, if we can get over it with authority, then markets are in the clear. All right, folks, I can't wait to see you here next time. Join us in Trade to Close every single day at 3 o'clock Eastern Time for the most exciting trading hour in the financial publishing world. It is Trade to Close. I am Mark Sebastian. Have a great day.